JB Cycles here with an update on September 3rd. So previous week we saw more weakness. Let's remove some lines here. So here we are on Monday. Actually I should probably add one day here because I think Monday is a holiday, but we ended down here, and yeah, let's continue the discussion on my 4-week cycle. In gray here I have the old cycle, how it worked before, and we see at this point we should have seen a market low if the old cycle was working, but the S&P continued down into towards the top of the old cycle. But as we have seen, the cycle may have changed or shifted into this position, so actually this low is where this possible new cycle suggested a low. So this kind of strengthened the case that the cycle has shifted, and we are perhaps looking at this cycle, but it may be sabotaged and have a much more bearish shape than this black projection up here. So switching over to this, here in red I have the 7-year cycle, and we are now in the most bearish phase of this cycle. When looking back at this point where we are right now, this is where we had the 1987 crash and the most bearish phase of the 2008 decline. So you may ask, the 1987 crash was in October. How does that work with a 7-year cycle? Because we are now just entering September, and that's because the 7-year cycle is a bit shorter than 7 years. So remembering now that this is a very bearish phase of the cycle, and also that we are possibly entering the bullish phase of this 4-week cycle. Then we switch over to the hourly data, the Dow Jones Industrial. So previous week, as expected, we needed about 3 days to finish this ABC. Actually it was probably 4 days, and then we had a bounce that crossed this moving average that makes this qualifies as a swing high. So we have a difficult situation here now, because normally, you know, the ABC move is a easy one, and here it gets a bit more complicated. After an ABC you would normally expect a bigger bounce up, but looking at my wavelet, it kind of suggests that this was the swing high and we should look for a swing low some 3 or 4 days into next week. And next week I think is only a 4-day trading week, so we could go down all next week. Normally I would, in this position, I would not trust these indicators. This could be a double low, and these wavelets could morph into something else. They may be lying right now, and we could see this bigger bounce. And that would be in line with a 4-week cycle and the possible bullish phase coming here. But also we should remember we are in the most bearish phase of the 7-year cycle, and that is kind of supporting that this actually was a swing high, and we are looking for 3 or 4 days of downside. So it's hard to say, but I'm looking for a general downtrend into October, November, and the previous week we couldn't find support at the 4,000 level. We couldn't find support at this trend line, and neither this trend line. It was broken, so we are seeing signs of weakness. So I don't know how this move down, this possible move down into October, November, how it will play out. There will be bounces here, but it's hard to say exactly how and why, or how and how and when. Let's have a look at here I have the S&P and the 40-week shifted index. So I have shifted 2 40-week cycles, and what we see when we start to break the level 80 weeks ago, that's a major sign of weakness. Normally we find support at this level. Here we had a false break and popped up again, but looking back, here we tried to stay above, but then failed, and bad things happened. Here actually we broke quickly down, tried to pop up but found resistance and then further flushed down. So that's my major scenario, with a 7-year cycle going down and all. This should be the next confirmation, breaking down below this level and then starting to flush down. When looking at analogs, I'm following the 1972 case. We have a nice correlation with that one. So it suggests we are going down into October, November. Should go to lower lows, below the June lows, and then maybe we could consolidate into the next year, into the winter, and making another lower shoulder, and then have a very bearish period in the spring and summer. But we could also see crash-like action now in the fall. And when looking at these previous bear rallies, we saw that this bear rally, regarding time and length, it topped out at a very normal point, and we should now be going down to lower lows. It could go in a very straight down fashion, or we could now at this point, the next 1-2 weeks, perhaps see some kind of sideways action, a bounce, another lower shoulder before we are going further down. So as I said, I don't know how this will play out, but my scenario, supported by my analogs and cycles and indicators and so on, they all say we should go down to lower lows. And I've found a new interest in the market about, I don't know, 1.5 years ago or so, when I read all the news in Norway. I recognized so many things that I was familiar from 2007 and the year 2000. It was all these euphoric news, and I realized this we should be headed into a hard landing. And it also is supported by my possible 28-year cycle that I have shown earlier. It suggests that this 28-year cycle is probably at its top, and we are looking for weakness from here and possibly the next 14 years. But that's these longer cycles, it's hard to trust them and guessing how they will play out. So anyway, if we see lower lows, it would support the case that we could go down into the winter or next summer. See ya!